traders, investors, degenerate gamblers. Yes, I'm talking to you. We're back. The week has started off with some major news. Let's get into the plays and see what's going on for this week.
Yeah, RA Super Church, I'm switching file lanes. Pushing this off white MTM coupe, it look like cocaine. Top down track phone peeping, got a baddie with some good brain. Running up these digits, know this money ain't a damn thing. She like how I roll, she won't let me go. Yeah. I have diamonds froze, money stacked and rolled.
First thing we got to talk about is Facebook. Facebook has pulled back now, as of today, to the 200-day moving average. All right. Give me 1 second here. The 200-day moving average. The 200-day moving average is a very major buying point on the institutional level. A lot of major stocks, major companies at one point have pulled back to the 200-day moving average. What makes this different, though, is the news surrounding Facebook, the controversy surrounding Facebook, the name change, TikTok being a power player in the social media space, them getting into the metaverse and not really having secured themselves as a leader in that marketplace. So what does this mean for Facebook? And I feel like the stock market, the people have chosen. They have moved their dollars elsewhere. This pullback was so dramatic. I can give you the exact percentage. This was a 26% pullback in a day or in a week. And then 34%. Okay. We're up to 36.83% pullback on Facebook. All right. With most of that happening in the overnight session after the second. So Facebook is now trading like a penny stock. Would I touch it right now? Absolutely not. I am not buying Facebook. Why? Because I don't think they're the leader in the space anymore. Are they dead? Maybe, maybe not. I will give them a few more years and we'll see what happens. The only spot I would think about buying a little bit of Facebook, and that's just for a momentum play, would be specifically at 143.83. That's a major support zone that goes all the way back to March of 2020. So that's a possible buy area. And that would just be just off of technicals. But other than that, I don't have huge expectations of Facebook. They're having problem retaining employees. They are not getting a lot of new users. And most of their users, if we face it, are bots anyway. They are oversold on the RSI, and I just don't see it picking up. Am I going to play puts on it? No, I'm not. Let's go on to the volatility index. The volatility index is reading at 2144 right now. If we look at the overnight charts, it's slightly trending down. If we see the volatility index get below 20, I do think stocks will, briefly soar. And I am still very bullish on the market in the short term right now. I have a short term price target of about 377. I'm hoping we can hit 388. I do have calls out on that. If we do, that would be amazing. But we do have somewhat of a channel forming right here. I think it will bounce around up there through March, maybe mid-March, see some highs. We are currently in the short term over the last few days, the last few sessions, we're going sideways. We're staying between about 360 and 353. So this was a good opportunity for the day traders to hop in and make some quick profits scalping. Have I been scalping? No, it's not really my style. I much rather pull in large profits by holding overnight for days, weeks, or months. Big traders want big profits. All right. We're not looking for those small little 10% plays with options contracts. We're looking for 50%. And I think we can get that if we continue holding over the next couple weeks. S&P 500, we're seeing the same pattern. There's no differentiation between the S&P 500 and technology right now. As far as the RSI being sold at the end of January, we're starting to trend up. Once we see the RSI get over 50, we know we'll be back in proper bullish form for a short while. What else can we look at? That would be the dollar. The dollar is actually, it had a red day. It's trending down. I do have this nice upward channel that I have on the dollar, and it's moving up nicely. And like I said in the last video, if the dollar peaks in June or July, that could mean a pullback on stocks. So prepare yourself. If you've been listening over the last couple weeks, because I'm trying to put these out every single week, the last call was the Bitcoin. I called the bottom on Bitcoin. Let me go back to the screen. We called the bottom on Bitcoin about here on the 27th. If you did buy in, you will be up about 25% on Bitcoin. All right. A couple weeks ago, I also called NASDAQ. If you bought NASDAQ, you will be up about 6% if you bought the actual ETF, QQQ. If you bought options contracts, you'd be up close to about 20-30% right now, depending on the delta on those options contracts. So really good plays. What's going on in the sectors and over the 3 month? If you look at this over the 3 month, the energy sector has been the outlier. It's been the top performer in the market. So people have used the energy as a hedge of sorts against tech. And energy has completely soared away from the 200-day moving average. If we zoom out long term, technically we have an energy breakout right now. So could energy go higher? Absolutely. I think energy can go all the way to 77 before we see some substantial resistance, and that might happen towards mid 2022. So if energy continues this solid breakout uptrend, it will put us about 77 on the XLE ETF somewhere around the end of May. If you have any questions, I'm always available. Feel free to reach out. By all means, please click that like button, subscribe. Let's stay in touch. May the markets be with you.
Press the gas, Lamborghini drive, VVS is on my neck, she like